actually down here standing with Sandy Villery, he's co-manager of the Villery Balanced Fund. It's a family money, his own fund, and it's interesting because you guys, I mean, we booked you way back, but you guys have made the same move as Warren Buffett. You just bought Apple shares, so the two kind of hottest stories of the day here. Talk to us first about Bank of America, because you owned the common shares, and then back in June, you sold out of those and bought into the preferred. Why?
Yeah, and this is unusual because we're very long-term oriented. So here we are. This is basically end of November, and we bought Bank of America common. And then what basically happened is we started to get a little bit more nervous about the story. When you start to look at Bank of America, we thought now we have a utility, something that might be 5 or 10 years from now, even long-term oriented, with all the regulation of Frank Dodd as well as Basel III. These are some problems, and so we wanted to get out. And so we got out on the day that they announced an $8.5 billion potential settlement that we thought could be maybe 2 or 3 times that number with some bondholders.
Chump change.
Yeah, exactly. So we got out of our position, but we wanted to still be involved because we don't think Bank of America is going to go under or anything like that, but we think that it's going to be a long-term bad investment. So we bought some Bank of America convertible preferred, which actually pays about a 9% dividend yield, which we thought put us higher on the capital structure.
And better than Buffett, right? He's getting 6.
That's exactly right. So anyway, we think that's going to work out well for us, give us exposure to it. And today's investment by Warren Buffett really just shows confidence. It's something that the market has been lacking. Leadership, confidence, these are all things that we want. And he's actually he's doing that and coming through with a lot of confidence, which is what I wanted to see. So now the markets don't have to worry that Bank of America is going to go back and have to raise equity. A lot of people were guessing that they might have to, and I think that's why you had to sell off initially. So here you are with Warren Buffett stepping to the plate, not going to see an equity raise out of Bank of America, and confidence in our market.
We are getting confirmation, according to an AOL spokesman, that they have indeed retained Allen and Company and Wachtell Lipton as advisors. So well-known advisors, in fact, a legal firm, Wachtell Lipton, and deal guys, Allen and Company. So again, we know AOL has been under a lot of pressure exploring options for the company. So again, this stock ending the day up about 9%. You know, Sandy, we're looking at a name like AOL here, lots of speculation. Do you see any value in a name like this that's been so beaten down, so played? They're looking at options. Do you have any interest here?
You know, I really don't, frankly, have interest in that. I'm a lot more interested in Apple, frankly, at 12 times earnings, growing at probably 19%. And, you look at the Steve Jobs issue and whatnot. What I'm worried about is, let's say they're not able to sign up China Telecom with 600 million subscribers in 2012. That's the real questions I think people need to be asking themselves. And will the iPhone 5 be ready in the next few months here? So those are the things that I'm concerned about, and I think it's going to work well for Apple shareholders.
You must have positive answers to those questions in your mind, right, if you just moved into the shares.
Yeah, exactly. And I think that, again, we look at everything from a PE to growth standpoint. So we look at Apple trading at that discounted multiple. We look at their cash. I mean, $10 billion in cash last quarter they generated. It's just unbelievable. So I think that's going to be a name that's going to work out very well. I mean, and the other people that think it's going to work out well are the carriers. Here you think that the average revenue per unit on an Apple or an iPhone, I should say, might be like $200 or $300. That's what we pay. No, it's subsidized. It's actually $600. And so you go into an iPhone store with AT&T, and they're going to sign you up to a 2-year deal where you have to pay $100 a month. So you're talking about $2,000 probably, or $2,400 over 2 years, versus a regular phone where you're going to pay $30 a month. It's going to be $360. So the carriers love selling Apples and smartphones. And the other thing is they've got 4 to 5% market share in the global handset market. And so Nokia at the peak had 40%, got down to 20%. But I think that if they can just get to 15%, Apple share is going to be a lot higher than they are today.
This is a guy who's convinced, Carol. Yeah. This is a guy who really believes in his investments.
Well, he just bought in 10 days ago. He better believe in it. Hey, listen, we'll come back to you in just a second. Julie, I want to bring you back in because the news that Steve Jobs is stepping down, it really didn't seem to faze investors today, but there are potential risks out there for the company.
Right, and you talked about some of them a little bit earlier with Ashok Kumar, and also we heard from Gene Munster, who said one of the challenges may be continuing to attract top talent with Steve Jobs no longer in the CEO position. Another person who expressed at least some reservations, although he still has a buy rating on the stock, is Mike Abramsky over at RBC. He talked about the sort of intangible that makes Apple Apple. He said, can Apple, now the largest company in tech, keep its cool and wow factor? Can they remain unassailable. And I want to bring up a chart that speaks actually to Sandy's point, and that is global market share in smartphones. At least this is projected by IDC for this year. This is by operating system, not by actual handsets. Android, of course, is still expected to hold on to that top spot at 40%, but then the iPhone, at least for this year, is projected to be at around 16%. So, Sandy, I guess I'm more interested in this sort of intangible question. I mean, with Steve Jobs no longer there as CEO, how concerned are you, not necessarily this year or even next year, but if you're looking 5 years out, does Apple retain that ability to come out with these innovative, blockbuster, really culture-changing products?
Yeah, I mean, I think that's a very interesting question, and frankly, I think they can. I think they will. And, you know, they say Frank Sinatra never got wealthy moving pianos. I mean, just like Steve Jobs, you have 50,000 employees there. He's been delegating to good managers, good talent this whole time. Nobody can do it by themselves. I also think he has a lot that's written down. In other words, my TV, I've got an Apple TV, and I think it's okay. I think, you know, we're still at a point where your TV and your laptop are different. That's gonna eventually meld and come together. So I think he's going to be working on a lot of. I think Apple's going to be coming up with a lot of good solutions for the future, and I'm frankly not worried that they will stop being an innovative company, because I think they will continue to be so.
Hey guys, I want to stay on Apple for a moment, but I want to also bring in some traders, because they've been tracking the Apple news as well. We've got Andrew Keene from the Chicago Board Options Exchange. He's an independent trader who trades Apple options. Also with us, Bob Iaccino, founder and president of TraderOutlook. He trades both Apple and Bank of America over at the CME Group in Chicago. Andrew, let me ask you first, any kind of interesting options trade here when it comes to Apple on this news?
Nothing really interesting. When it pushed back down to the 350 level, I got long. Then it popped $17 the other day. I got out of my longs, and then I'm flat again. You know, yesterday when it opened, it was halted. It was down back to that 352, 351 level, and then it popped right from there. We've seen this play out many times. I traded it when it was $80 the first time Steve Jobs said he was going to leave, take a leave of absence. Went down to 65. That next day, it closed unchanged on the day. That's what we're seeing today. Every time Apple dips, there's buying pressure down there.
You know, Bob, there's been a lot of news on Apple, not over just the last few months, but over the last few years as we've kind of watched Steve Jobs in terms of his health concerns, and to some extent, I think investors are somewhat used to it. I mean, what about you in terms of the trade that you noticed on Apple today?
Well, I tend to agree with all the previous guests. Here's the thing with Apple. I don't think the market has any problem with Apple, whether Steve Jobs is involved in the day-to-day or not. And you brought up, can they keep the cool factor? Can they still be sort of the hip new product? And I have a niece who has an iPod who has no idea who Steve Jobs is. There's a whole generation of Apple users that are growing up with Apple now, as some of us grew up with PCs, and they're getting used to it. People my age are changing over to, I changed over to Macs 4 or 5 years ago, and I think that they keep that cool factor. The range of 356 to 383 that Apple's been trading over in the recent past, I think is still going to maintain. Right. And Apple has a chance, because of the way the market feels about the stock, to make new highs on just a quick pop in the S&P. I actually like the S&P short term after Bernanke's speech tomorrow. Apple can make new highs just off of a few-day rally in the overall market. You know,
Sandy, the cool factor is really important, but, you know, we always talk here when we look at Apple, it's not just a technology company, it's a consumer product company. I mean, you really are, you know, at the whim of the consumer, whether or not they like your product. I mean, I'm curious, what are the questions you want to be asking Apple at this point?
Yeah, I mean, if you own Apple, you always want to know what's next, what's cool. You want to, I mean, literally, you want to know what are they coming up with next. It's pretty amazing that a company can come up with an iPhone 5 that has this much clamor. There's plenty of movies out there. They get to the 4th and 5th version. It's nothing fun to watch. I also think that the departure of Jobs is largely discounted in the stock. I mean, you saw where it closed today. So that's been, the market's a wonderful discounting mechanism. I think you're seeing that play out in the shares, and that's what happened today.
Hey, you know, it's interesting. I think you and Carol are two of the only people that bought Apple TV, but obviously everyone else uses the other products. And we had someone made a good point a moment ago. It doesn't matter really who Steve Jobs is to the kids buying the phones today, buying the iPads today. I mean, he's not in the commercials, right? Right. Steve Jobs only matters to guys who are like 35 and older. So what do you think as far as the driving products? Are we going to continue to see the iPad, the iPhone 5? Are those going to continue to be the drivers? Or do you think something like Apple TV or some new product is going to take over?
I think you're going to continuously see new products out of them. They've got to continuously reinvent themselves. They're not going to settle. They're not going to sit on their laurels. They're going to move forward. I mean, it's funny. My 3-year-old now is very conversant with an iPhone and everything like that. He can switch it around to everything. So that's what he's growing up with, and I can promise you he's not going to switch to some other product later down the road. So they're going to continue to reinvent themselves.
Especially as long as you own the shares, right?
You can bet that right. So I think that, again, I still think that the TV is something that Apple's just making. They really haven't done anything special, in my opinion, in that foray. And I bet as you see time go on that they make a big push into that regard.
Welcome back to Street Smart. I am here on the floor of the New York Stock Exchange with Sandy Villery. He is co-manager of the Villery Balance Fund. It's a family fund which has made, let's say, some timely investments. Just made the same kind of move Warren Buffett did. They actually sold common shares of Bank of America, but bought in to the preferred shares, and also just bought into Apple, which is an interesting move because those are kind of the two hot stories of the day. We thought it's great to have him here and wanted to know what more they do at his fund. And we were thinking maybe we'd start out by asking you how you come up with your ideas. Do you screen for stocks? Do you have a team out there? I mean, what do you do to get your feelers out and find the stocks that you like?
Yeah, and we're multi-cap, so we're always we can look at things that have that low PE to growth, strong free cash flow, low debt. These are the companies we like. We have a trusted network of analysts that help us discover the stocks that we'd screen for. And then we like to visit company management. We really like to get in there and peel back the onion and figure out what's going on within a particular business. And then we like to check with competitors, suppliers, anybody else that can give us an insight into that business to make sure we're on the right track.
Sounds like a lot of work for a family fund.
Well, it's a little bit of work.
Let's take a look at some of your picks. And Luminex is one of them. You're saying this is a stock I might need to look into a little bit more deeply.
Yeah, no, so yeah, exactly. With your cough, I think that's right. Yeah, Luminex. So let me tell you a little bit about that. They basically sell biological testing technology to the life sciences market. So what I love about these guys is they have the ability to multiplex. And when I say that, I mean they have the ability to do 500 tests on one drop of fluid or blood. If you think about Gillette's business model, Gillette, they make their money on the razor, but where they make their real money is on the razor blades, that recurring revenue. And the same thing, when Luminex sells an analyzer, they make their money on the beads or the consumables that run through it. So to kind of bring it home, let me tell you about one of their tests. It's an RVP test, which is a respiratory viral panel test. So you walk into your doctor, they can test for basically 8 different viruses of various strands of influenza. So you walk into your doctor, and he gives you an antibiotic or something like that for whether it's bacterial or it's viral, but an antibiotic won't work on a virus. So it helps you identify it correctly. It does it quicker, cheaper, and I think only 28% of hospitalizations are actually diagnosed correctly.
But I imagine it's not just the cool stuff that the company makes. I mean, you're putting your own money on the line here, right? So do you go and meet the management? You want to look at the actual company? I mean, how much research, how deep do you go?
Yeah, exactly. I mean, we try to talk to their customers. We try to figure out, we talk to different hospitals. We try to figure out how this is going to work. And the CEO is a very impressive guy named Pat Balthrop, who came from Abbott Labs, and they're based in Austin, Texas, and $100 million in cash, no debt, just made a nice acquisition in Aerogen, and I think they're going to continue to look, scour the world, basically, for nice acquisitions. It's nice to be a company that has cash in a market and environment that's uncertain as now.
Right. Hard not to feel upbeat. This is a company that also just boosted its forecast, Sandy. But let me ask you, it trades at a 54 for their estimated PE and their current PE of 68. Isn't that a little pricey here?
Yeah, I think the earnings that you may be looking at, I think the earnings are going to be a little bit above what may be looking at there. But this company is just coming out, and they only became profitable just recently. So as these earnings expand, you're going to see a nice multiple expansion on the stock, and I think the story's going to work really well from here.
It's interesting. Pool Corp, it's the nation's largest distributor for pool construction. You guys like this too. It seems to me as we're heading into, or if we're worried about heading into another recession here, building a pool isn't going to be the consumer's first order of business.
Right, you're absolutely right. In fact, about 75% or more of their sales actually come from maintenance and pool parts. So, you can only put so much duct tape on your pool pump before you got to go out and buy a new one. So, what I think is going to happen is we sat down with Manny Perez de la Mesa, the CEO, and he's telling me that they can actually grow earnings at 20% over the next 5 years, and that assumes no recovery in housing, which would be the new pool construction, et cetera. So, again, 2.3% 4% dividend yield, which looks pretty good when you look at where the 10-year Treasury is at 2.2%. Again, that yield is taxed at 15% versus the Treasury at ordinary income. So I think that looks good from that perspective. We're excited about pool. It's boring.
Well, you know, not to be a naysayer here, but Sandy, this is a stock that's up about 33% in the past year. I mean, I'm not saying that it can't continue. I mean, it's up 10% already this year, but none of that ever makes you kind of a little nervous when the stock's had a pretty healthy run here?
Yeah, it tends to peak in the summertime. I think we're going to have a longer pool season than is typical. Weather's going to stay hotter a little bit longer. But no, the stock still trades at a reasonable 17 times earnings, and again, growing at 20%. Very little debt on the balance sheet, and I think it's going to work well as they continue to proceed with their business.
She is a skeptic. You might want to get her on your board.
Yeah, I think I need to.
This is what you need.
Yeah, exactly.
All right, listen, Matt, you got to bring up the next one because it involves auto parts.
I was going to let you because, you know, girls like cars too, but I love cars. Right. O'Reilly Automotive is a stock that you like here. It's an aftermarket auto parts supplier, which to me, if you're worried about the economy, makes a heck of a lot of sense, right? Because a lot of guys, rather than buying a new car, you go and fix up the old one, or rather than buying factory parts, you go to the aftermarket guys and look for a better deal.
You're exactly right, Matt. I mean, these guys have 3,600 stores in 39 states, so a really big player in the U.S., right behind AutoZone. They're going to do really well. As the average age of cars increases, which it is, then you're going to have to actually, you know, maintain your car, etc. Not only that, but the other trend that's going on is maintaining your vehicle is actually more complicated. There's more bells and whistles, more electronics, so you bring it into a garage. Well, O'Reilly has 50% of their sales to the commercial division, which are garages and things like that, so they're buying the parts from O'Reilly as well. So a bigger percentage than the AutoZones and Advanced Auto Parts of the world.
Hey, Sandy, earlier this month they increased their share repurchase program by about $500 million. That's the best use of their money in your view?
Yeah, I think they just made an acquisition in CSK Auto. They bought back about 6 million shares in the first half of 2011. These guys, if you believe cash is king, they've got a 5% free cash flow yield, which I think is very healthy. I think in the last decade, they've actually had one down year in earnings. It was 2008. I think they were down about 1.8%. So this is it's a great investment for an uncertain climate. If you think gas prices are going to continue to come down, that's kind of the last point is that people might drive more, and again, more wear and tear in your car. You got to either do it yourself, go to an O'Reilly, or you got to go into a garage and get them to fix it for you.
I could talk about cars, by the way, forever.
Right.
Used cars, Carol, sometimes lately are costing almost as much as new cars because they're so hot right now. But I want to get back to the hot story really of the day, and that's Bank of America. What do you think Warren Buffett's investment at the end of the day does? Because it doesn't really build up capital for the bank, but it does put kind of his seal of approval on their business.
Yeah, no, it absolutely does. And not only that, I think it puts a seal of approval on confidence in the market, which we've been lacking in a big way. And if you look at the pillars of the market, it's the financials that are going to hold up. I mean, investors look through the rearview mirror instead of through the windshield, and what they're looking at is 2008, 2009 financial crisis that I don't think is going to happen. So when you have a guy like Warren Buffett come in, make that $5 billion investment, that shows confidence, and that's exactly what this market needs right now.
Are you guys hedging against it, though? I noticed that protection costs a heck of a lot in this market.
Yeah, we're not. We've got our Bank of America convertible preferred, very nice dividend. Now it's about 8.5% since it lifted this morning, and very happy with that investment.
But not hedging against further drops in the market?
No, we don't hedge. We're long only. So again, 20 stocks, very concentrated portfolio with our Villary Balance Fund. So excited about that.
All right, Sandy, it's been a pleasure. Thanks so much for joining us.
Thanks,
Sandy Villary there. Carol, back up to you at World Headquarters.
I got it, Matt. Thank you so much.